Hello and welcome to Not Just Ads. I'm Alessandro De Zanche, Ads, and I am a monetization consultant. I've been at the intersection of media, advertising, and marketing for over 20 years, working in areas like AdTech, media, telco, research, agency. I also advise companies on AI, and it's through the lens of AI and privacy that I look at the challenges and the opportunities of today's industry. Not Just Ads is a video podcast that I wanted to bring online all the interesting conversations about the dynamics and the opportunities in the industry that I'm usually having offline over coffee or lunch. In this episode, I'm talking to Tom Triscari, a former colleague and friend and an industry leader. We discuss the unfulfilled promise of programmatic advertising and what the future holds for media brands and advertisers. Enjoy. Hello and welcome to Not Just Ads. This time, Tom Triscari is with us, and I'm particularly happy for a few reasons. One, we know each other for many years. Two, we work together at Yahoo, which is my professional great love. Three, we work and lived in the same city, Barcelona, which is the best city in the world, according to myself. So overall, I'm very happy to have you here, Tom. How are you?
Thanks, Alessandro. Happy to be here. Yes, it is the best city in the world except for Madrid. Just kidding, all my Barcelona friends.
Great. So, talking about Yahoo, what has left to you? What is that Yahoo meant for your professional career, and how do you see what you learned there, what you saw there in today's world?
Yeah, so that was a great time because I joined around, you were already there. I joined in June of 2008. They had just acquired Right Media for $680 million. We all had to absorb that, and that changed a lot of things internally, how the sales and the account management teams were running, because it was all direct insertion orders. And then that came along, and there was a lot of formation. We had a lot of great training from folks like, say, Nick Hugh, who went on to be the CEO of The Telegraph, who you know really well. Now he's at another company.
Benatos.
But yeah, exactly. So we had a lot of great training. We had an early bite at the apple of programmatic, and then that led, of course, to other things like myself going to Criteo, which was another place to go learn at another level about programmatic advertising and ad tech in general. But Yahoo was a great place because coming from the perspective of a person who was a manager with a large team, the team's got a lot of training, the managers got a lot of training. Yahoo invests in its people. It's a great culture. It still is probably better than ever right now, actually, under Apollo's ownership. I know the folks well over there. They participated in AdTech Economic Forum, my event in New York, and I'm a big fan of the company. In fact, on my newsletter, I know we're going to talk about some of the things today, one of the more recent posts that I did on market sizing, but about a year ago, actually, this time, I was the first one to really do a valuation of Yahoo, and I posted my valuation on my newsletter, and that went off really well with the folks internally at Yahoo, because it kind of went around like wildfire, because it's a private company, and if you have shares that you're vesting, you kind of want to know, what is this company worth? And so it's a very valuable company today. It's much bigger than people understand, I think, just because it's not public, so you don't see all the numbers, but it's very big, both in terms of even with a low search percentage share of market, it's still billions and billions of dollars, right? Even with a low percentage. And then, of course, in the display business, it has great properties, and they're continuing to do really well. So it's always great to see the folks, alumni from Yahoo, just all over the place in this industry.
And you mentioned your newsletter. I love it. You go much more in depth than most of the industry. But keeping the eyes on Yahoo, I think for me, two things are very important to mention. One, we had our own, before the acquisitions, we had our own, but even after the acquisition, we had our own ad tech and we produced our own content. And that was a very powerful combination. And the second, which is maybe useful when we later will analyze the development and today's market. I was working in what they were called targeting products, and we were very sophisticated.
It was very early days of behavioral targeting.
Very early days, but we were very sophisticated. We had search data, we had ad log data, we had content consumption data, we had declared data, we had geodata, we had a vast number of data sources, and we went out to market. We used to go out to market with this powerful narrative on how we knew our audience. And then came programmatic, and then came Right Media, and suddenly overnight it switched on. You click on a whatever vertical ad.
The prophecy began.
Exactly.
The prophecy began.
Exactly.
The belief system, the religion. It's interesting. We'll get into this maybe a little bit later, but I was just reading something like last week, and I've been kind of like quoting it here and there. So Napoleon said, religion is so that poor people don't kill rich people, right? So programmatic is a religion
Messianic,
in a lot of ways. Yeah. So programmatic
Triscari
became this thing where it's like, one-to-one audience targeting, wow, the holy grail, and I can buy $1 or $2 CPMs and everything's going to be great. Now, the reason why after the 4 years at Yahoo, when I ended up going to Criteo, which they tried to recruit me the year before, I said no, I stayed, and then eventually I went, mainly because when Greg Coleman came over after the Series C, and I knew, okay, there's definitely something good going on here, so I'm going to follow always hit yourself to a star when you can. But I remember Criteo was buying all these insertion orders. And it was on my team, a salesperson on the team in the office in Barcelona. And Criteo just came out of the blue. No one ever heard of it. And then all of a sudden they're buying like $1 million insertion orders. It went from 50K tests, 10K, 50K. Then it was like this really significant numbers. And that reached the SVPs and the senior staff in Europe. And they're like, what is this company? And they asked me to do an investigation and to analyze what the heck was going on. And I mean, without going into the details, the end result was like, they're buying inventory for us for $1 and selling it for $6. And they're like, how the hell are they doing that? And I'm like, it doesn't really matter. I don't know about that part. I'd like to go find out, and that's how I ended up there. Because I was asked to do that research and I was fascinated by this company. And then I was like, okay, I'm going to go. But they did it better, but it doesn't really matter. Even in that regard, even with retargeting, which Criteo is a totally different business these days, because of cookie deprecation, it makes it more difficult to do that type of retargeting. And they had all these other assets that they've now, of course, transitioned into and use those assets to convert into, a retail media powerhouse. But even so, when you are, when you're doing that work and you're like, oh, okay, well, if you're just targeting people who are going to convert anyway, then it's a self-fulfilling prophecy. And there's other prophecies going on around, as you know, and you write about quite a bit, which is things like, what is the ad quality? What am I getting for $1? What am I getting for that? And you're probably not getting very much for it. We can go a little bit more into that, but I was in New York yesterday, and this topic always comes up, and people wonder why. And I talk about like, hey, you have to understand, I think, the structure of the demand curve versus the supply curve. The demand curve coming from advertisers. Observationally, one could say, well, and if and you've been around and done consulting with big brands and dealt with a lot of procurement people, when you're taking 15% of your overall media budget as an advertiser to go buy $1 CPMs, and the rest of it's like, TV at $50, $60, $70, YouTube at $15, $20, search at $10, $12. And so those are more expensive CPMs, radio, outdoor. And what you do is you then take 10, 15, 20% of that and you buy $1 CPMs, you're averaging down your overall CPM, and it's like a vanity metric. It's like, oh, look, here's what we did this year. We took our overall average weighted average CPM down from $20 to $18. Therefore, we saved, the company 10%. There's no savings because that $1 CPM didn't buy really much. But that $1 CPM feeds, in my analysis that I think we're going to go through, it feeds a $31 billion industry, that demand curve. So there's something going on there. And I've always said, it doesn't matter what the supply is, if it's low quality or the greatest quality. If there's demand for something, somebody will supply it.
Yes. And at the end of the day, it's all about incentives.
And there's a lot of fees being made, and there's a lot of vested interest in that 31 billion. That's all built on $2 CPMs to date. Maybe that'll change in the future. So
your sizing of the open web. So let's this is a great introduction to deep dive into your analysis. So what are the key takeaways?
Yeah, so what Alessandro is referring to is my newsletter, Quo Vadis. You can find it at triscari.substack.com.
I will post the link in the video notes.
Yeah, so this is my it's the post number 91. It's called Open Web Market Sizing, and so I did this a while ago. I did my first iteration of this a year ago. I showed it at some events that I speak at. Like I first showed it, I think, at a Beeler Tech event with a fireside chat with Rob Beeler. And then Rob has since then become my partner in AdTech Economic Forum, which is the event we did in April in New York. We're doing it again March 19th. Also coming to London on February 6th, which is a very different type of AdTech Economic Forum, which we might talk about a little bit later, but a very unique type of twist on what we do. So anyhow, I showed this in that event and other events, and it got a lot of notoriety, and it really got people's attention because it pointed out the fact that where does the money flow? Where has the media money flowed? And I break down all the market components, or most of them. Hopefully I got all of them. It's an imperfect science at the end of the day, but we try to do the best we can with it. And my question to myself was, how really big is open web, meaning ads in boxes on websites, right? And that branches off into two components. There's direct sold deals, which I was just sitting with a major publisher yesterday at lunch in New York, and they want to sell as much direct as they can, as you know. And then there's the other portion is programmatic. The more you go down the long tail of publishers by size, the more programmatic it is, meaning you hit a certain point when they only monetize through programmatic, meaning DSPs, SSPs. So I just wanted to understand what that world looked like. And then if we can get down to what is the open web of money that leaves a DSP, my estimate's 31 billion. And then of that, who are the players? And of course, we learned a lot with the Google DOJ case, which gave me the incentive to redo my analysis because we got new information about how to break it down, right? Trade Desk obviously being really big, almost in my view, in my numbers, as big as DV360 plus, Google AdWords display ads, right? Known as Google Ads plus DV360 is still bigger than the Trade Desk, but we'll see when Trade Desk comes out with their numbers in February. I think it's going to be pretty close, right? Trade Desk has come very big. And then the question is what happens in the future? Who takes more of the pie, right? There's a lot of players in ad tech and programmatic ad tech, a lot of companies. And that was part of the analysis as well, to talk about, build the framework, discuss the framework, talk about what that means for M&A, what that means for venture capital, et cetera, where to invest next.
That's absolutely an eye-opener, because I think as well, going back to what you said earlier about the motivation to invest for $1 or $2, and what you mentioned now about the open web, it raises the question, but all these brands that are investing in the open marketplace, in the open web, would invest in the open marketplace if quality media were not there? Because that's my constant.
Well, hold on a second. What is quality, right? So in other words, there is the truth about the world, And then there is reporting and metrics
Sure. No,
that
I'm
you
not
get.
talking about. I'm not talking about content. Content is subjective. I'm talking about standards, viewability, quality of data, reputation.
Let's talk. Let's talk about that. I mean, look, standards, right? So, I've written about this before. Jeff Bezos wrote, I think it was the 2018 letter to shareholders about what does it mean to have high standards, right? Are they universal? Are they domain specific and things like that? And then you look at the open web. You look at, let's start with television, actually. This is a very high standard. It's just pure quality, particularly live sports. And that's moving into streaming. Live sports is always the sort of the sharp end of the spear, right? Super high quality. Unfortunately, when it comes to CTV, I love college sports, college football in particular. You watch college football. I use YouTube TV, but it doesn't matter. It's just a conduit to what I would have on cable television anyway. It's the same thing, more or less. And I'm going to see the same Mercedes ad. I'm not joking. Over a 4-hour game, I'll see the same Mercedes ad probably, I don't know, 30 times. I'll see the same Allstate ad or Progressive ad 30 times. They only run there's only 4 ads or 5 ads. And I'm like, this is so wait a minute. What about all this talk about CTV and everything else? And it's like, I'm not being targeted at all. And I shut off the ads. I changed the channel to another football game, right? Because I don't want to watch
I've seen stats. Brands don't know what more than 50% of their budgets on CTV go.
Yeah, there's that too. And so, but then when it comes to the open web and, ads in boxes and IAB boxes, right? Which can be very good. And you and I have talked before about the older days. I don't want to really, because I get kind of annoyed with too many people out there. Oh, in the old days, it was like this and blah, blah, blah. Okay, forget about that.
You said
doesn't
it,
matter.
I didn't.
Yeah, but it doesn't matter. Those days are gone and you're in a different time period. And so,
absolutely.
But there's a lot of that going around, and it's not helping matters at all. There used to be you do a homepage takeover on a good quality site, and there was a lot of great creative. Like Yahoo had Yahoo Studio, and then you've got other big publishers who have their studios. You could do some amazing things, even with boxes, ads in boxes. I'm working with a company at Landmark Ventures called Genie.ar, for example, and they have a virtual try-on ad unit. It's stunning, right? Consumers are spending 31, 32 seconds on average trying on a pair of Ray-Bans that's in the ad unit, and you click on it and you try them on and you see yourself with those Ray-Bans on, just because their spatial tech works really good, meaning the sunglasses aren't old, they're actually on your face correctly. That's super cool. So there's these things that you can do that are really cool with a ad in a box on a website. But when it comes to what we talk about quality, and this quality tree, meaning first of all, okay, user comes to website, that initiates a process, and ad unit is not sold directly. Ad unit goes to many SSPs. They shoot it out to DSPs. There's a bid response. Somebody wins, and an ad is served. Okay. First question is that user even human? Right. I talked this, and so that leads me to just on that topic. We'll go down the tree, but on is it human or not? Is the user human or not? It says, oh wait, no. There's all these safeguards in place now. Fraud's taken care of, and blah blah blah. And that's just totally not true, because no one really wants to do the real data and really look at the world, because it might be too scary, right? Versus just spending the money and kind of turn your head the other way. So there's an experiment anyone can run, and no one's been able to answer this question for me. So you could take a clean machine, right, behind a bunch of firewalls, right? The internet knows nothing about this machine. And you're running a Chrome browser, Chrome developer, right? So you're basically turning your Chrome browser into a declared bot. And you go to sites and you get ad served. How is that even possible? That's not even like a bad bot. That's a declared Chrome crawler bot. It's declared, but you're still getting ad served. So I don't know how that all works out. So that's that. That's
my point. But I'll let you finish first.
Yeah. And then you have the next thing. Okay, great. Let's say, is it human? Yes or no? Yes, it's a human. It's definitive. This is a human being. Great. Okay. Was the ad viewable or not? Or how viewable was it? Well, viewability standards set by the MRC are incredibly low bar. I mean, this is like if the Olympics had a high jump, except it was like, 2 centimeters versus like 20 meters, right? Jeff Bezos, high standard, right? MRC, very low standard. And so that's kind of interesting topic right there. Just like, why are the standards set so low? Who set these standards? What's in play here? Why isn't there a better way? And so, but then who cares about IAB standards at the end of the day, or MRC standards? They can do it. They're doing their job. That's great. They're doing what they're supposed to do. They collect their money from all the ad tech companies to certify them every year. Wonderful, right? What does that matter to Unilever or P&G or GM, L'Oreal? Set your own standards. Set them higher and measure against them. Whether or not they do that, that's a whole different conversation we can have at another time. Then there's brand. Then once the ad's human, the ad's viewable, then it's about brand safety, which is a whole subjective area, which is, that's going through some changes.
Proven that for premium publishers does not make any difference. I've seen some reports that are stunning, and really make you think what's going on, as you mentioned earlier. But isn't what you're saying confirming my theory that the open marketplace is a system that is built and maintained to fulfill business models that are mainly attached to ad tech companies, while the issue is that premium media owners are legitimizing it with their and providing reputation with their presence while diluting their value. But we could talk for hours about this.
Yeah. Look, and then it goes back things like, things that Brian Weiser says all the time. So why do people make the choices they make? It's because it's the least worst alternative. Meaning, if they're spending 15% of their media budget on open web, money that leaves a DSP, on ads and boxes on websites that have maybe suspect performance and suspect quality that no one really measures correctly, because it'd be too painful to do so, or the realization of it, then they're doing that because the next alternative down where they could is not as good. So it's like you always spend your money in advertising to the least worst alternative. So, you start with TV, then like, okay, what about this? What about social? What about YouTube? And then you still have a bucket left over. You have a diversified thinking. And in that diversification, some money ends up a significant chunk, 10, 15%, depending on the brand. Now, of course, those are bigger brand numbers. If you go to like a D2C company, say a company that's, good D2C e-commerce company selling something interesting, they just 50 million in revenue a year, 100 million in revenue a year, they don't buy open web. They don't buy anything. They don't buy that. They do other things, right? That's a different ballgame. Why brands don't look to the leaders, the real thinkers who are executing ad strategies, right? And look to them and say, I want to model myself after that and those high standards. That's a totally different question as well. There's a lot of incentives in play.
I think that the blame is on every side, and media owners haven't done an incredible work in providing alternatives to that. They rather go with the flow. And
So media owners and publishers, if you go back to the beginning of the Holy Grail of programmatic, their business models have been under financial threat for a while, right? Like, how do they continue to grow? How do they make a profit? Ad stack is expensive, ad ops is expensive, sales is expensive, editorial is expensive. Maybe those things change a little bit with AI, maybe a lot, who knows, we'll see. But I think publishers maybe they got convinced into something 12 years ago, 15 years ago. And once they got in that position, it becomes sort of like a bit of a modified prisoner's dilemma game where they're kind of stuck. And now that they're stuck there, they got stuck, and a lot of forces and a lot of parties wanted to keep them stuck there because the money coming out the other side was starting to be too good, right? And you had to maintain.
But I think that, yes, that's a great analogy, the prisoners. But I think that now we are also at the Stockholm syndrome kind of phase where the cage is open, the opportunities are there, the first party web, the possibility of working together
Absolutely.
as a category. But yet they haven't left the cage yet.
Yeah, like for example, if you look at, for example, Permutive, right? They're working with, the grand majority of the top publishers in the world, right? Joe Root's a brilliant CEO, very articulate, really great technology, I think. And yet, where's the adoption on the advertiser side, right? So that thing that you're talking about, bringing publishers, meaning I can't tell you how many conversations I've had recently and this is all organic. It's not coming from me in these conversations. I'm hearing it from other people, and I'm like, wait a minute. There's a pattern forming here, which is multi-pub deals on a single campaign with audience targeting, all direct sold, no programmatic at all. That's a possibility because the cookies are gone. Publishers have first-party data. There's technologies out there like Permutive and others, ID5, et cetera. And it's like, hey, you could go buy today. Because see, that was the big rub. When you wanted to buy Yahoo, Washington Post, New York Times, you had to do it all separately, right? Now, when you get to the point where you could have one campaign in one platform and buy a multi-pub deal on a single campaign IO and have audience targeting or some sort of intent signal targeting like the stuff that Dotdash Meredith has been working on, that's all doable. Of course, go do that. You're going to get great results.
Yes, but it's not complete, in my opinion. I'm like a broken record on this. It's not enough working together. You can't have your feet on 50 different shoes. You cannot be a media alliance and then the individual members sell the same inventory in the open marketplace. You cannot be on Permutive, Xandr, you name them. That's tactic versus strategy. What is missing is a long-term strategy.
Yeah, and
I don't know how you see.
Yeah, well, that's difficult because when we're talking about publishers being stuck in a box in a corner, it's like, okay, then all you see is the next quarter and just surviving versus like how do you even if you blueprint the best long-term strategy, how do you execute that quarter on quarter and build up to that high aspiration? Like, for example, when you think about like a McKinsey framework of set high aspirations, get quick wins, look for signs of momentum, right? And manage incentives by those signs of momentum, meaning like a chart that goes up to the right. Well, the high aspiration is like 2-3 years out because that's the long-term endpoint. But how do you manage when you're trying to deal with the day-to-day and the next quarter of delivering a number? It's really difficult to do.
Well, I don't buy that excuse anymore because we have more and more examples of publishers that in the long term have. It's not about switching it off overnight. It's about phasing something out while you work on something that is better. You don't have to stop immediately.
You could parallel strategies, what you're saying. Yes. Meaning you start like here's where we want to be and what we want to look like 3 years from now. Let's just have a parallel system, a parallel team, go do that. And it's kind of like two lines that eventually will cross, like you're out with the old and in with the new.
Or start testing on a small percentage. Start testing on 10%. And then does it work? Yes. Okay. Let's improve. Let's increase. And I think that's I'm happy because I can see results. And what the AdTech part of the industry doesn't realize is without quality media environment, and when I say quality, I don't mean content. I mean the experience. Yeah. There is no quality advertising.
Exactly.
But the curated marketplace.
Let's talk about that a little bit. This new, can we put it in quotes? We have to put that in air quotes. Curation, right?
Curation. I want to have a Triscarian view on curation.
Yeah, it reminds me always of these things like going back in the history of the next new thing, particularly in programmatic land. Like one of the bigger moments, like in 2017, everybody realized open web, and all of a sudden, viewability was a big problem. All of a sudden, you had deal IDs, and everything became a private marketplace, and yet it was the same inventory as before, and still biddable, and nothing much changed. But the perception, the optics of it looked like, oh my God, there's the solution, magic, presto. Okay, let's keep spending. It reminds me of that scene in Wolf of Wall Street when DiCaprio sits down for lunch with McConaughey, and McConaughey's giving him the words of wisdom, and he's telling him, he's like, and he says something to the effect of, no, you don't let the client sell. Don't let them take money out of the market. No, you got to come up. What's the next idea? What's the next thing? What's the next stock? Right? Because you got to take the money. You got to take the client. You got to take the money from the client's pocket into your pocket. Right? And that's it. This is the new idea. You got to keep the ball in the air around, because no one's dealt with the underlying quality problem of $2 CPMs, right? You want to live in a fantasy land. Like, look, the bottom line is this. You can think of all the places you can put your advertising money, and you can put them on a bell curve, right? A distribution curve. And like, okay, like I know when I spend a $50 CPM on TV, I know exactly what I'm going to get. And you can't say I'm getting the same thing for $2, or else the $2 thing you'd spend 50, or the TV would be worth $2, right? So there's a continuum there. I mean, when you think about cheap reach, it's like, well, that's a relative statement. It's cheap because something else is more expensive and better, and it's probably better, hopefully. But yeah, curation is like it's just the next new thing to me. It's like, okay, so now I can curate the publisher, basically like a whitelist inside of some sort of thing, and I could be like, oh, I'm going to have a couple quality publishers in there out of 100, and I'm going to stuff in a bunch of junk. And that now relates to the second movie that has a lot of parallels, which is The Big Short.
I love these references.
Because at the end of the day...
what is the second movie?
The Big Short, because it's like a collateralized debt obligation of basically you package up a bunch of shitty mortgages that have a low credit rating, and you put some good ones in there. The whole thing gets rated by ad verification as being good, and you sell it into the ecosystem, and everybody buys it.
I mean, curated marketplaces.
There's nothing wrong with it.
No, but curated marketplaces are not my first choice. My first choice would be media alliances and marketplace owned and operated by media owners. But we can't, though, think that everybody is in bad faith and all the curated marketplaces will be a few quality media companies.
If anybody, like, if you think about curated marketplace, I mean, what Trade Desk, for example, on the top 100 or their SP 500, which of course is tied to relationships around UID 2.0, meaning you don't see Yahoo on that list, or you didn't. Maybe they are today, but you didn't initially because they weren't doing UID 2.0. So you got on that list with Trade Desk, right? I think if you were going to be a partner with the UID, great, fine, that's business as normal. But all of those publisher names on that list are quality, right? And as a DSP, I think they're doing the most work with saying, look, if you want it, we can do this for you. You can have all the quality you want, but that's probably going to come at a slightly higher price. And whether or not the buyer wants to stomach a $5 or $6 CPM versus a $1 or $2 CPM, that's up to them. And you get what you get for it.
Especially if the members of that specific marketplace are also in the open marketplace, which then complicates things. And in any way, I'm happy. I wrote an article calling it the race to the top, finally, between media alliances and curated marketplaces. So I'm quite positive, hopefully. But then again, still, the risk is with curated marketplaces that publishers, media owners will move from commoditization to premium commoditization. But that's another story.
Does it? My question, and the jury's out on this. I don't know today if curation actually changes anything. It's just a different look, right?
Yeah.
My analogy
is a third party picking.
Yeah. My analogy is just like Pizza Hut or Taco Bell. It's the same four ingredients. It's just another product. You have a taco and then you have a chalupa, but it's got the same four ingredients, right? Pizza Hut. You got dough, you got mozzarella cheese, you got pepperoni.
Tom,
so what?
Tom.
So what? So what if they put the cheese inside the crust? It's still the same four ingredients, but it's a new product.
Tom, you are Italian American and you go to Pizza Hut. What are you telling me?
No, in fact, my wife and I, we talked about this last night because we're like, you know what? Like, if you ask New Yorkers, they don't even know what a Pizza Hut is. Like, no one goes to a Pizza Hut in New York. I don't even know if there are any. There must be somewhere. I don't think people go to them though.
Yeah, I mean, you know that we are always joking about Italian heritage and culture. So we could go for many more hours, but I want to close. I remember you published different episodes in your newsletter about, like, it was a theatrical piece.
Which one?
It was a theatrical piece where you had different characters, different roles, and so this brings to my overarching thought that I have more and more often, and I'm thinking, is what's happening in the industry all a theater? So is everybody playing a role, a part with the script, and we know how it ends up? And that's the question, and the closing. Not the question. That's my thought. But the closing question is, if that's a theatrical piece, what is, in Tom Triscari's opinion, the end of this 2025? What is the final like for next year?
Yeah, it's interesting because this is what makes the advertising business so great, because it's magical in a way, right? Because it's very hard to do good advertising, right? And since the advent of digital, I think the overlying sort of easy button sales pitch is like, hey, we've invented this platform and look how easy advertising is. And I'm like, it doesn't stand up to logic. It doesn't stand up to reason, like, because advertising is hard to put money in and actually get. So here's the thing. To put $100 into advertising expense and get something. Now, remember, that $100 is a cash expense. It leaves the building, $100. Somebody gets it. So your return is not revenue. Your return is not even incremental revenue. Your return are the profits off the incremental revenue, because that's cash back in. That's hard to do. It's very hard to spend $100 and get an incremental revenue gain on whatever your profit margins are that equal $100 or more, hopefully, to actually get a positive ROI. That's real ROI. Incredibly difficult to do. And it will always be difficult to do. And that's what makes the ones who are really good at it, or good at anything. I mean, think about it. I mean, you love sports. It's like, all right, you're a young kid growing up in Italy and you're going to play for AC Milan, or you're going to play for Juventus, right? Great. Well, what are the chances of that? Well, that's the same probabilities that we're dealing with. You want to go to Harvard, right? You want to go to a top university, very low. You got to work hard. It's not easy. But nothing in advertising is the same way. It's very difficult. In between all that, right, you got a really giant market, right? And you have this thing where in the that's why I hate these analogies around, like, oh, we're going to compare programmatic or advertising to the financial markets. No, in the financial markets, you know exactly what you put in and exactly what you got back. In the advertising, it's very difficult to know what you got back because the measurement piece is very, very difficult, right? And that's what makes it interesting. And that's why, like, when you go to a festival like Cannes, for example, Cannes Lions, that's what makes it, I think, so amazing, is that, you know, you got the creativity side, you got the media side, and you've got this thing where you know that advertising must produce some response back, but getting to exactly how much is very difficult. And it seems like that's what, from a technological innovation perspective, the industry is working toward getting better and better at that. In the meanwhile, it's always going to be a little bit bloody,
But you didn't give me the final
Which is what?
the final of this for the script of 2025.
Oh, yeah. So I've posted part one. It's a 3-part, Programmatic the Musical. So part one has been posted. That was posted a while ago. Then I got very busy. I have part 2 drafted and almost done. I haven't done anything with it yet. And then I know the ending. So I'm not going to reveal the ending right now. That would ruin it.
No, absolutely. That's a very good point. But do you use real people to imagine your characters?
Well, absolutely. Not only that, I mean, Brian O'Kelly is in scene 11 as a cameo, which I got permission from Brian, and I had a character written and the scene written, and then I'm like, Brian, read this, and I'm like, I want to do this as a cameo if you'll do it, and he did it. There's definitely the characters come from sort of an agglomerate, this composite of people that we've come across over these years, because there's a lot of characters in this industry. You're one of them.
Absolutely. Thank you, Tom. Looking forward to read part 2 then.
I can't wait, man. I can't wait.
Thank you.
Thanks, Alessandro.